Hey there, what's going on, ladies and gentlemen? It's time for Bulls versus Bears, the weekly Forex forecast. My name is Dr. Greg McLeod, and it's so good to be with you here on this wonderful Saturday morning. I am looking forward to sharing with you my insights and forecasts for the upcoming week. And I'm just going, before we get started, I want to direct your attention to the risk disclosure. I think we have one here. Risk disclosure on our screen, right? I would like to show you that. Just to give me a break here. And it's an exciting week. We're going to have non-farm payroll this week, as well as the Fed rate decision and a bunch of other goodies too, which I'm going to reveal to you. And we're going to be going to the My Market heat map in just a moment. Just want to go ahead and get to the risk disclaimer on our screen. And let me see what it is. And that. Live. This is live, ladies and gentlemen. Yeah. Mm-hmm. And I'm going to copy. I'm going to paste. I'm constructing this as we speak, right? And can you believe that April's almost over and we are right here looking at looking at May coming up. And okay, let's share. Sharing is caring, and there we go. It's the weekly Forex forecast, ladies and gentlemen. Elite Traders University, brought to you by Elite Traders University. Go to www.elite Traders University to learn how to trade Forex. I'm a 28-year trading veteran, and I've got some tricks up my sleeve I'd love to share with my students who invest in themselves. If you're willing to invest in yourself, then go ahead and go to elitetradersuniversity.com. There's plenty of resources to help you. If you want my help to learn faster in a short amount of time, like 90 days or less, then consider investing in yourself. Okay, let me go ahead and let's get to the risk disclaimer on your screen. Make sure you understand all this associated foreign exchange trading. And this is the weekly Forex forecast, Bulls versus Bears. It's the NFP and Fed rate decision, ladies and gentlemen. Pretty excited for the week of May 1st, 2023. Again, my name is Dr. Gregory McLeod. I'm the currency strategist with Elite Traders University. I'm also the founder and CEO. And so let's go ahead and get started. Let's get right into one of my favorite tools to use. And let me go ahead and bring that over. Is my market heat map. It's the arrangement of currency pairs by percentage change, but it's an all-purpose tool that I use for finding trading opportunities in the market. If you ever look at a chart and not knowing what to trade or how to trade or when to get in and when to get out, my market heat map is the tool that professionals use worldwide to find, see what's hopping, what's popping, what's dropping, and what's not in the market. Right now, it's 50% off our subscription, and it has 6 powerful heat maps. You can go to the front page. You don't have to pay a dime to use it. We have 6 powerful heat maps. I'll put one with the majors on there. We have one with all the currency pairs. We have one with global stocks, indices, crypto majors, commodities, indices. But this one I give you for free. It's the majors and also the economic calendar that's on the inside. That's also I put on the outside too. Absolutely free for all you freebie junkies out there. It's a powerful tool for seeing what to trade. And what we want to do is this is like fun with flags. You want to find the flag and you want to trade, those pairs which are going to be active. This is telling you it's like a cheat sheet, guys. It tells you what's going to be it's in play, what's active, what the market players are looking at, because news is like the wind in a sail. And think of all the currency pairs, the little sailboats on the water, And when news comes out, it's like a big gust of wind that blows those pairs around in different directions. And chances are, if you're in something that's not moving, it's probably because there's no news behind it. Okay. I know a lot of gurus out there saying, don't trade the news, it's risky. Yeah, if you don't have a great system, of course, you'll lose your shirt, stay away. If you have a good system like the pip and run compound day trading system with the predictive function, then it's like taking candy out from a baby, right? Plus knowing what to trade, right? Like for instance, this week we have Japanese consumer confidence, and we also have Chinese manufacturing data coming out as well. On Monday, we have the US ISM manufacturing PMI, a high impact item. So these are the currencies that are going to be active. You want to look at dollar yen, for instance. Dollar yen screamed after we had some news out of Japan, the first announcements from the new monetary chair. And we saw dollar yen scream from a 133 area up to 136. And so it looks like it could continue to trend higher. And so dollar news and Japanese news could cause that trend to continue. So if you're trying to trade, CAD Swiss, well, notice there's no Canadian flag up here or Swiss flag yet. And so you're probably gonna be in the wrong pair. Another big one is a rate decision, the RBA. RBA stands for Reserve Bank of Australia. Interest rate decision. It's widely, the previous was 3.6% forecast call for them to really not raise rates and keep it steady at 3.6%. The recent hikes in interest rates have caused slowdowns in the housing market, slowdowns in the retail sales. And so they don't want to start a recession. They want to gently, like all the other central banks around the world who were fighting inflation diligently by raising interest rates. So now they're probably they're taking their foot off the pedal and maybe not so hawkish or not wanting to raise rates too much more because it could cause recession. So we saw that the RBA, the inflation report actually showed that inflation had dropped. And so the RBA may not raise interest rates. That can be pretty bearish for the currency, for the Australian dollar and the Australian currency pairs. But you want to keep an eye on that. If the rates are unchanged, the Aussie could sell off. If they decide to have a surprise hike, then we could see the Australian dollar rally. But we'll take a look at the technicals, because the technicals are like the footprints in the sand, and they kind of give us an indication of where the big money is flowing. We can track down those big elephants, the herd, and be able to follow where they're going. Swiss consumer confidence supposed to increase from -30 to -24.4. I'm not a big Swiss trader. Dollar Swiss, Aussie Swiss, very rarely does this really move the needle much. They were going through negative interest rates, much like Japan, and so sometimes the news doesn't really move the market. But you might take a look at Swiss yen and see what happens there. We have an inflation rate out of Italy, a member of the Eurozone, so the euro will be affected. They're looking at forecasts of an increase from 7.6% to 7.7%. This could force the ECB to continue to hike rates. They are kind of late to the rate hiking party, while other governments around the world central banks were actually hiking rates. The ECB has been relatively hands-off, but a hot print in inflation could force the hand of the ECB and cause them to raise rates, which would cause the euro to appreciate some more. Okay. Also, the inflation rate out of the Eurozone year on year is supposed to rise from 6.9% to 7%. Again, another piece of evidence that will cause ECB to consider raising rates to bring that inflation down to the 2% target. And they'll do that by hiking. One of the tools at their disposal is hiking rates. And that would try to remedy the situation. Now, interest rates are one of the biggest drivers of currency movement. So anytime you hear about a central bank raising interest rates, you should perk up your ears and get really excited or salivating like a bell being rung like this, that somebody's about to get paid. And if you're on the right side of the trade, you'll get paid, right? Okay, let's look at later on at 10 a.m. on that Tuesday. We also have the U.S. JOLTS job openings supposed to fall from 9.93 million to 9.68 million. And, higher interest rates usually reduces job growth. We see the big tech layoffs that have been going on. And, a lot of people losing their jobs as a result of when money is tight, the first thing they do is they cut employees. And given also you've got the AI coming in too, jobs being lost by technological innovation, as well as for just to stop the losses, the bottom line for companies. So unemployment rate out of the Eurozone expected to stay unchanged at 6.6%. And that is another high impact item that's coming out at 5 a.m. on Wednesday. That's going to kick off our Wednesday trading. ISM Services PMI. PMI stands for Purchasing Managers Index. And so we're looking at, they're going to be surveying they had a survey of the managers. And you see the number looks like it's increasing from 51.2 to 51.8. Could be positive. The U.S. economy. Now, you guys got to understand, and the little paradox here, just because a number is good for the U.S. economy does not mean it's good for the U.S. dollar, okay? So it really, especially going into the biggest announcement that the whole planet is going to be looking at, is the Fed interest rate announcement at 2 p.m. on Wednesday. In fact, you might see the market be totally flat, totally boring. So if you're used to getting up at 3 a.m. and trading London, Wednesday might not be the day you want to do that, because European traders are probably going to sit on their hands and wait for the Fed to come out at 2 p.m. With their announcement, okay? So you might be able to sleep in this time, okay? So Fed rate decision, they're expected to raise rates a quarter basis point from 5% to 5.25%. And in order to fight inflation, we're in a rate hiking cycle. Now, with the softer retail sales numbers and softer economic data showing that the interest rates are actually having an effect in slowing down the economy, this could be a one and done, where the Fed might and also look at what's going on with the banks. There's a liquidity crunch out there. Silicon Valley Bank going under. You got the First Citizens, the Republic Bank, all these banks like falling apart. Basically, we're having if you go to 1933, around the same time of the year, some 100 years or something 90 something years earlier, we had the same thing happen, right? And we also had a default in 33 too, and the closing of the gold window. They confiscate people's gold in 33. So a lot of things happened in these cycles. We had a pandemic back in 1918. You go, 100 years later, we have a pandemic. So look at these 100-year cycles and see what's going on. Watch gold. They close the gold window. So we might even see a price moving gold. We could take a look at that as well. And if inflation is going out of control, usually gold is an inflation hedge where people will run to gold. But sometimes when they're raising interest rates, since gold doesn't pay any interest, sometimes gold will sell off in lieu of the interest rates going up, right? So they're kind of like an inverse correlation. When one goes up, the other goes down. There's going to be a Fed press conference after that at 2:30 to basically talk about why they think the state of the economy and why they raised interest rates or why they didn't raise interest rates. it's widely expected for them to raise. But the language will tell us whether they're going to continue hiking or are they going to be data dependent and watch the data, to see, because the way the market is looking at the bond market, looks like they're pricing in maybe one more hike and then actually some cuts by the end of the year, because they probably overshot their target, right? Then you have the at 9:30, you're going to have the Australian balance of trade. It's supposed to have dropped from 13.87 to 12.75 billion. And they're trying to ramp things up, trying to patch things up with China. They sent an envoy over to China to talk about trade. And so, because China is one of Australia's largest trading partners, and so trying to increase trade is very important. If we do have softer trade numbers, it could also be bearish for the Australian dollar. CAC and manufacturing PMI supposed to have actually risen from 50 to 50.3, which is another, could be a turning point for the Australian dollar. As the Chinese data has been lackluster, and so the Australian dollar has been like in this channel, in this really boring range, and usually when we see the S&P breakout, then we usually see Australian dollar breakout too. But for the month, really, the S&P really hasn't gone anywhere. Thursday, May 4th. May the 4th be with you. Hey, all you Star Wars fans out there, think about that one, right? May 4th, European balance of trade supposed to have risen from 16 billion to 16.1 billion. That could support the euro. Now, positive economic data for the Eurozone is actually good for the currency, okay? While positive data for the US may actually be negative for the currency. Now, the ECB also has a rate decision too, not to be outdone by the Fed and the Reserve Bank of Australia. The ECB is going to have an interest rate decision. And it's rough, and it's widely expected for them to actually raise rates from 3.5% to 3.75%. And actually, they've been doing, they've been keeping up pretty much with the, moving from 0 and moving up to 3.75. And they also have a deposit facility rate, and that's supposed to rise from 3% to 3.25%. Balance of trade from the U.S., 8:30 a.m. Eastern time. We're going to look at the balance of trade going from negative 70.5 billion, increasing to negative 63.5 billion. This is the balance of trade, like our exports, and we're a net, importer. We import more than we export. So this lower negative number is positive, and if your brain can wrap around that, right? We have Canadian trade balance, and they're positive, but it's actually, well, look, there's a chart. Look at that. But it's actually dropped. Look at this. Okay, nice. But it's actually dropped from 0.42 billion to 0.3 billion. Okay. You got to figure that if interest rates are up, it's going to it decreases demand, right? Before we had lumber prices skyrocketing, we can't find anything. You got supply chain disruption, pushing prices up, scarce stuff. So the supply chain stuff is down. It seems to be over. It's worked its way out. You don't have ships backed out in the ocean for like months on end. And also lumber prices have been collapsing. And lumber is one of the big exports out of Canada, along with oil. They have a lot of natural resources in Canada. And when there is high interest rates, well, they're not building as many houses. Well, there's not as much investment, not much building and expansion. Therefore, balance of trade goes down. And we see negative trade or lower trade in every country zone except for the Eurozone and China, right? We have the ECB press conference is going to tell us why they raised interest rates or why they made that decision. So the euro will be very, very active very active at 7:45. Usually the announcement's at 7:45. I guess they moved it up a little bit, let people get a few minutes of sleep. Then we have IVPMI. There's lots of high impact news. I mean, this week is really on fire. We have Canadian IVPMI. It's supposed to drop from 58.2 to 53. And that's the IVPM, a purchasing manager index. And if you're a purchasing manager and and things look bad and possibly a recession, you're not buying anything. You're a purchasing manager, you know that if you're going to buy more stuff, if you feel that the economy is going to be good, you'll buy more stuff. But if you don't think the economy is so good, you're not going to buy as much stuff. And what does that mean? Well, it means that there's going to be less inflows into the Canadian dollar, right? Because there's that cross-border trade or international trade. Unemployment rate from the US, we're at Friday, May the 5th. Happy Cinco de Mayo. All right. Feliz Cinco de Mayo, right? Unemployment rate is supposed to rise from 3.5% to 3.6%. No doubt, especially with layoffs, okay? Non-farm payrolls comes out. It's supposed to be a drop from 236,000, the previous number, to 180,000. And again, those layoffs, the higher interest rate hikes destroy jobs, okay? Destroys jobs and then people can't buy stuff and prices go down, right? Because of supply and demand. That's how that works, right? That's why you guys need to learn how to trade, okay? Don't get me started. The moment you start connecting the dots, you realize that, oh, for us to lower inflation, you have to lose your job and maybe go on unemployment. You can't buy as much stuff because you've been laid off. But if you learn how to trade and you make as much money as you want, then you don't have to worry about being on the government dole and then giving you a handout, or you having to sacrifice and cut back on your lifestyle because the federal government decides to raise interest rates to destroy jobs to lower inflation. Basically your collateral damage, right? Say, oh yeah, we're gonna lose so many people, and that's just the way it goes, right? And it doesn't have to be that way. You can make the decision not to be a sheep, not to be the cattle. I got one brokerage, they have this red sheep as their logo. It's like, really? A red sheep? You're covered with blood and you're a sheep? It's like, that doesn't sound like, before, like you had, brokerages that have like lions or bears or something, Now they have a sheep, a red sheep, right? Okay. So you don't want to be a red sheep. You don't want to be the sheep for the slaughter, right? You want to take full advantage of the knowledge that someone may offer you in order to improve your life and take control. So you can have at least 5 streams of income, at least have 2, have trading and have a job. But if you only have a job and knock that out, you're doomed, right? So you need a backup, and you need to click the link below. You need to watch my webinar, 4 Pillars of 6 Figures, and learn about what we do and how we get traders to get a 95% and above win rate using my proprietary system. This system is not offered for free. It's not offered free on YouTube. It's what we use in institutions when I was on the desk. So, and I've been doing this for 30 years. So real simple. It's not free. It's not cheap. You're going to have to invest in it, just like you invest in your college education that you're in debt for. But 90 days and, hard work, because it's not get rich quick, you can make a nice 6-figure income. I want big congratulations to Kobus. Kobus is one of my students from South Africa, and he got a $50,000 prop trading account, and he made $2,500 today, not using OPM, other people's money, and he gets to keep 80% of that. It's really, really cool to be able to do that. Okay, when we have financing options available, where can you afford $600 to learn a 95% win rate system and be connected with the prop trading companies that we're connected with, so you can get up to $200,000 to $1 million to trade, and it doesn't cost you a dime because we pay for the audition. Okay, so if you're interested in becoming a professional trader and having firm capital to trade, then go ahead and click the link, book a call with my sales team, and enroll and learn and profit. All right, end of commercial. But I tell you what, don't get me hot about this, about these jobs being lost, people getting laid off, so we can have lower prices, right? Kind of reminds me of one of those Star Trek things where they take the people and they all go into this, or Logan's Run. Some of them have to die in order for, they've turned 30 and they like put you in like a vaporizing machine. It's like, yeah, like this is like the same kind of thing. Well, not, you don't get vaporized, but it's probably another job, right? Okay. Anyway, moving right along. We have the Canada data of Canada. We have the unemployment rate also ticking higher there from 5% to 5.1%. And we have actually some data on Sunday. We have the NAB business confidence. It's going to rise from -1 to 1. I guess the businesses are more confident, and you can't trade it because it's on actually Sunday 9:30 p.m. Yeah, you can trade it. And then we have Westpac consumer confidence change. And so the Aussie is going to be in play going into the end of the week. And so, wow, we got a lot. That's pretty good. Again, you can go to mymarketheatmap.com. Doesn't cost you a dime. Come to the front and you have the heat maps when we have the active market. You also have the economic calendar free on the front page of the website, right? And if you want to join My Market Heat Map and get access to the other 5 powerful heat maps, along with charting, along with a Forex screener, stock screener as well, and a number of other analytics tools, then it's a great tool. Okay, so let's get to the charts, okay? Let's take a look at the technical. I know you guys are like, oh, okay, great. Let's get to the technicals. Okay, the technicals, okay? And we're gonna get to the technicals. We're gonna get to them right now. We're gonna get to our technicals. We're gonna clean up our charts a bit and get all this squiggly stuff off so we can get a full, clear view of what's going on the charts here. We're gonna start with the DXY. That's the US dollar index. US dollar index is a basket of currencies versus US dollar. And, being able to take a look at what's going on there, you understand how to trade the majors. The major currency pairs are the 6 or 7 that are on the front page of the My Market Heat Map. And they all have US dollar in them, right? So they all have US dollar in them, so we know how to trade them. Turn this heater off. It's a little warm in here. And I don't have to yell. So here we are, the US dollar index. When we're going to start with a monthly chart, the monthly chart's like looking at the 50,000 foot view of what's going on in price. We can go all the way back in time, back to 2002 and back to the 1980s. We can go back in time. We can actually see the US dollar has been in a downtrend for the past 40 years. Lower swing lows and lower swing highs, except we got this little bump here where price actually broke, right? So we've got this downward sloping trend line. We rallied. We have our upward sloping trend line as a result of higher, right? And we're sitting right on Fibonacci, some type of Fibonacci level right here, right? But we've got some support. I mean, if you go back to this level here, to the low that we had back in 2008, which was like global financial crisis. And so now we are sitting on just below the 23% Fibonacci retracement here, right? That's what we're looking at. And we're just moving sideways. I mean, this is a monthly chart, and basically we haven't gone anywhere 1, 2, 3, 4 months. But we're bottoming out. Let's drop it to a weekly chart, and we can see that we're just small body doji candles, indecision, spinning tops, all hovering around this area here. And we're just buying time ahead of May. Big sell in May and go away is the mantra we hear. right? The dollar was in decline, you know, and now we've kind of we've been in this decline. We're forming this kind of a triangle here, and so we're looking for either a break south, and that would take us down to the 200 simple moving average, but a break north. I'm thinking that usually seasonally the dollar rallies in May. If you go back to some other charts, we can see that the dollar has rallied into from May. From we can see that right here, March, and then the May we had this rise in 2018, and we had a rise here in 2019, and the dollar rose. Maybe go here. It didn't. No, well, yeah, it did. It rose. It rose from March into May, right? April and May, topped out, kind of moved sideways, and then it dropped going into June, right? So the dollar has a tendency to rally in May, and it hasn't gone any lower, and we've got this significant double bottom here, right? So that is on a weekly chart, that's huge, right? That means there's a lot of pent-up demand, and we could see an explosion. So bulls versus bears, US dollar, I am bullish, near-term bullish. Well, you want to see a break, though. You want to see a break above like 102. The 102 area would take us up back. We would probably continue back up to 114, right? Okay, let's go ahead and take a look at the anti-dollar, which is the euro, EUR/USD. It's also hiking in rate, so it's really interesting. And you can see that we've been in this band of resistance, of support, kind of like a neutral zone, kind of like we haven't really, we have made new highs, but barely, just very, very, we're still in an uptrend. We still have our uptrend, but it's, it's huge, right? But it doesn't look like that. But I think these are monthly candles, and we went from like 119 to 110, right? So let's look. We can work it down, and you can see big break candle, big bullish candle. The euro is seasonally strong during this time, right? Up through April and May. Sometimes we get a little weakness, but let's go ahead and go to a daily chart. You see, we're kind of topping out. We were making higher highs and higher lows, but now we're making like the same high, a double top there, maybe just a slightly wick higher, and the angle is that we had a nice steep angle, and we broke through this trend line, and then we broke below it, and now we're breaking trend lines. So that's not a sign of strength. It's a sign of the waning strength, that eventually this thing will top out and roll over and drop. Bulls versus bears, I am short-term bullish, but medium-term bearish, and I actually look for a big correction in line with maybe this old level of support down here in the 105.35 area. It won't hit there like right now, but over time, I'm favoring the shorts on this one. Maybe we get one more push higher on Monday, and then Sunday, Monday, and then maybe a reversal. The Fed decision probably will push this over the edge. This is like over the cliff right now, like right on the edge, thin ice, and we can see a big move downward. Okay, we can drop down to a 4-hour chart, see what's going on there. Again, this thing can't get out of its own way. Look, higher highs, higher lows, nice stair step pattern, and then we broke down, and then we rallied and broke down and hit the backside of that trend line and broke down. And now we're working our way down. We're having some lower highs and lower lows. So we are poised for a rollover to the south side of Chicago here, right? Let's take a look at the pound versus US dollar, US GBP, USD, and let's go right across the pond and take a look at what's going on there. Starting off with, I mean, big breakout. I mean, just remarkable breakout we had from this consolidation. We had this month breakout, boom, big blowout candle from we had a low like 122 and got to like 126, like 400 pips in a month. That's tremendous, right? And congratulations to those who took that. You know, I scalped it down, I scalped it up. You know, I'm not much of a holder. I don't need to. I don't want to. But not saying it's wrong. I just like sleeping at night. And there were nice uptrend, higher highs and higher lows. So on a daily chart, I would not take any sells. I mean, this thing is just screaming bullish. Not a red candle for weeks. Week, right? Let's go down the daily chart. You can see that we made a new high, slightly new high, right? Still uptrend. We have a trend line here, and we move that line down there. It's a icky line there, right? And then snap it. So this is our first test of a line. 2 points make a line, and we'll see if this line holds. If it breaks, and we're coming up with some old resistance. I mean, we've got you know 2659, a high from June 1st, 2022, and we've got some right there, a high from June 7th, 2022. So you know this, and those are the highs we just broke out. That these June highs, and those highs here were those highs here, and we broke it. Now we're in this zone here. So sometimes you get a big kind of capitulation, kind of a blowout, kind of like, oh, and then after that we could drop off, right? We've seen something like that before, where price breaks out. That was high, suck people into some type of a bull trap. I could suck them back in, since remember the other half of the pound is the US dollar of cable. And so with a strengthening US dollar and the Fed announcement, we could see the pound actually sell off. Okay, so let's go ahead and do a 4-hour chart, take a look, and see you got a little harami on a 4-hour. That's kind of telltale, kind of like, this is, you know, this harami means like a pregnant pattern or mommy with a baby in the front, but this baby is gonna turn to a bear. It could turn into a bear. So we look, no, maybe that we are at some type of a topping area. Short term, very short term bullish. We might see some type of continuation, but I am medium to longer term bearish. We are far above support. We've been in a range for a while, and we're just got outside of that range. If we were just like, you know, kind of like take the average, this is not perfect support resistance line. But you can see that once we get above this area, then we might snap back to a mean reversion, like a rubber band that's stretched out and then snaps back. This could be the extreme of that rubber band, and maybe fading this move back down to the might be useful, might be interesting, you know, might be interesting. You would want, you would want to wait. The Fed announcement is so very, very, very important. People don't discount the Fed and the announcement, because you might say, "Oh, yeah, I'm going to trade this. I want to trade because I want to trade," and you really don't understand that you're playing with fire. That the Fed could come out and just really whack the market, And if they say something like, oh, we're done, we're not going to do it anymore, well, this thing goes up to like 127. If they say, oh, well, we have more hikes coming, and on the initial release, we might see the pound actually sell off dramatically, big long wicks and things like that, as the liquidity actually might dry up, because big players may also be scared too. They might say, hey, well, we don't know what's going to happen. So now you have this vacuum. All the institutions are on the sidelines and there's no one in there. So it's like a hurricane, like a tornado. We had a tornado warning in Dallas. And I went to pick up my kids from school. There was like no one on the street. It's like, what are you doing? I'm going to pick up my kids. Like, don't you know there's a tornado? It's like, I'm not from around here. I don't know what that siren is. There's no traffic at 3:00 in the afternoon. So it must, it was, but yeah. So you may be out there trying to trade and there's no one in the market. You push your trade in, then you get slipped, all of a sudden you're filled at a different price and you're like, what happened? The broker ripped me off, blah, 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 blah. It's like, no one's making prices. You're the only one out there. So you get your stop becomes a market order and it gets filled at the next best available price. It could be 10, 20 pips away from the price you press the button on. Okay. That's the risk you take when you are in these very crucial announcements. Okay. Even with a good system, the spreads could widen out. You could be like this one. Look, 62 by 70. That's a 10 pip spread right there. Look at that. It says 10 pips, right? I mean, it's the weekend, but spreads could blow out, and it might get a long wick up and a long wick down. Don't even try the straddle thing. Nah, don't even do that. You thought, oh yeah, I know, we're gonna put a buy stop of the high and a sell stop a little low. Wrong. They will spike it up, push you in, and spike it down and stop you out. So just giving you a piece of advice there. You don't have to take just my 2 pips, but just be careful. The Fed announcement, especially getting out there on a Wednesday or wherever the announcement is, don't get out there and find there's nothing moving until 2 p.m. Okay. All right. So bulls versus bears. I've got, you probably so I know my multiple time frame people are saying, Greg, look, you got this uptrend, higher highs and higher lows. Like, yeah, uptrend, right? But we had uptrend here too. And this thing has been going on for a long. You gotta look at the age of the trend too. This thing's been going on since like March. It's been going on for like a month. That's a long time for a currency pair to stay in a trend. I mean, we've had longer trends. Look at this trend, right? But they take a trend before they take a breather. They look, this is a breather. Red, 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 green, green, I'm taking a break. Red, 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 green, 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 I'm taking a break. Red, 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 green, I'm taking a break. Green, I am going on vacation. I'll be right back later, right? Okay, so bulls versus bears, short-term bullish, medium-term bearish. We may rally into these old highs here, 26.52. Okay, I'll keep going. AUD USD is going to be up in the news too, and you can see that we're already rolling over like Rover, right? We're going to remove all drawings here, right? Look at, this baby is not even trying to go up, right? It's like up, A, B, or whatever, it's just, and this is rolling over in such a way that we can come back and retest the lows here. And a good pair to look at. So, I'm just going to go straight into this and say, look, I'm bearish. They already said the inflation is down and they're probably not going to raise rates. So as long as we can stay below 67.93, I am bearish on this pair. But you want to look at Euro Aussie. And Euro Aussie, the Euro has been strong. They're in a rate hiking cycle. Aussie is, they're like inflation's down. They may not be so determined to raise rates. So if you have this kind of imbalance where you have one currency that is
the central bank is hiking and the other central bank is not hiking. Well, that you can game that. You can say, well, let me look at Euro Aussie and look at that. This is the euro versus Australian dollar. It's kicking butt. The year think of it as a fight. You're the fight promoter, like Don King, right? And you want to put a strong boxer in the ring with a weak boxer. That's when we trade currency. That's what we're doing. We're trading the relative strength of one currency against the other. We're going long or buying the strong currency and selling the weak currency. Okay. So what you want to do is like, okay, well, the euro is strong, Aussie is weak, so long euro Aussie. Oh, wow. What do I think of that, right? And it's a synthetic currency pair because all it is euro dollar divided by Australian dollar versus dollar. If you cross cancel it, you get euro Aussie, right? For all the math fraction people. So let's go to the monthly, and this thing is on a tear. Look at this. Usually Euro Aussie spikes when the economy is going to crash. Like you go back to 2008, you can see Euro Aussie just went nuts, right? And then this was the long-term capital, the meltdown, the Asian meltdown. So every meltdown we have, Euro Aussie just like it picks it up, And then over here, I think we had the Brexit, and then we had like Grexit back here. And then this was COVID, So Euro Aussie, I call it the Armageddon pair, because like, hey, if a meteor were to hit the earth right now, go long Euro Aussie, you'll be rich. You won't be able to collect it, but you'll have a lot of money, right? So it's like, when Euro Aussie is going down, things are usually happy, prosperity, joy, and So right now we're spiking. Euro Aussie is spiking. So that's telling you that bum 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 bum, right? This thing is heading up on the monthly. The monthly is on a tear. Let's go back to the weekly. Man, where was I on this thing? Look at that, right? It's an uptrend. Look at that. Daily is just ripping, right? Let's go to a 4 hour. So, okay, so here we go. This is the setup right here. And it's doing a little bit of retrace. We can break, if we can break whatever this is, right? The high. 67.11. Yeah, this is going, could go to the moon, right? That's technical term, right? You'll have some three-wave correction, little ABC. They might even, try even drawing a trend line across the top of that. When it breaks that, we would see a massive move for in Australia. So I'll put that on your watch list, guys. Euro Aussie 4 hour. He was like, oh, I can make money on the cells. Like, yeah. See, these are cells too. They're kind of small. This one, oh yeah, you can make some money on it, but I'm looking for a buy. I'm waiting for this thing to stop dropping and to resume the trend. This is a right there. We're hitting it. So that's why I'm looking at a break of that trend line. I'm in it to win it. Okay. Euro Aussie, that's a freebie. It's not one of the majors. I would go, yeah. And usually when the US dollar is moving sideways, the cross rates are actually pretty active. Let's say EURCAD, right? That's another cross rate. Look at that. Monthly chart. That's been, look at that, baby. Monthly is on a tear in the air, and like you don't care. right? Weekly, we're running into some old resistance back here. Yeah. But yeah, it's the dollar's moving sideways for a while, and this was like yeah, I was kind of sleep on the switch on this because your cross rates are probably all doing really well. Cross rates will, because usually people trade euro dollar, Aussie dollar, but when the dollar moves sideways, then they'll jump into some of the cross rates. The cross rates will start trending higher. Well, like we're like late to the party there. Aussie, Kiwi, AUD, and ZD. Oh wow, look at that! Look at that sell off. This is Aussie versus Kiwi. That's the weekly. The daily. And look at that. That's a nice downtrend. 4-hour chart. This thing ever came up for air. That was a nice little trade there when it rose up for a little bit and came back down. Yeah, it's a little late to the party here. Might get some type of a pullback, but all your cross rates might be in play. CAD, CHF, or they were in play. Oh, look at that. That's the monthly. Ooh, look at that. Hey, look, I was right. I had the arrow drawn. I completely forgot about this pair. I drew that arrow a long time ago. Well, anyway, it's gone now. So the trend is down. Let's look at a weekly chart. And looks like it wants to come up for air a little bit. Yeah, this wants to come up. The thing comes up for air and then it breaks the trend line. I'm in it to win it short, but it's not soup yet. Okay, anyway, I'm digressing. The Canadian dollar is what I wanted to get to. And look at this. This was interesting. Yeah. We got really big after a big rally up. I mean, we're downtrending on a daily, weekly. I mean, it's just a range. It's pretty choppy. Bulls versus bears. Daily, 4-hour. Ooh, that looks pretty nasty there too. But you know what? We have higher highs and higher lows. Oh yeah, okay, we're breaking broke the trend line. Yeah, but we're right at the 200. I know we don't have another candle, so we can't really draw that line. Right. You need a candle on the other side of it, a higher low, and that would give us but we just stuck with that. That's pretty good there too, right? That we would probably get a retracement back up to the trend line. Okay, let's take a look at XAU USD, look at gold. And we might see maybe what could gold do in that $2,000 mark. Or in 1989, I remember 1989. I graduated from college a long time ago. Remove drawings. I saw Brian Ferry at Universal Amphitheater in 88. You're getting all these years, 80, 84, 89, 91, right? And we can see we have lower highs and lower lows, pretty choppy. And then we're just breaking trend lines on the way down, just breaking them. And if the Fed raises rates as we get closer to the announcement, this may continue. We're just breaking these lines and going lower and lower and lower with gold. It's not going down in a straight line, but it's a lot lower than it was a few weeks ago. And a big congratulations to my student, Ammon. Ammon crushed gold. And let me bring up his, I'll bring up what he did. Like, you want to join all the happy people who graduated from Elite Traders University, guys. That's what you want to do. and we're hitting it 90% win rate and above. And yeah, Ammon it was pretty cool because he just posted this chart and he's like, you know, what's going on, Ammon? He goes, well, I did this in gold today. I'm like, what'd you do, man? So, you know, I made like a few $1,000s, like a few $1,000s. Let me see. Oh yeah, that looks really nice. And those numbers, 83, 86, 88, 87, baby. Let's bring 87 back. Bring 88 back, right? Yeah, yeah. He's a trading machine. He was with me in Vegas. He did our mastermind Las Vegas, and he was smoking it. It was really, really cool what he was able to do. Right. In fact, I'm trying to find his actual post, which is everyone in the room just went mad. They went crazy when they saw his post. It says, I made a few thousand on gold this morning. like, good doing. Your trades are so perfect. I like that, man. So a lot of happy, smiley faces because they make money with my system. Okay. Anyway, back to the charts. Back to charts. Back to reality. Anyway. All right. So gold, bearish on gold. Okay. Let's go SPX 500. I was looking for a big breakout, and we did. I did call it, right? Did I call it? Did I call it? Come on, guys. Show me some love, right? I mean, it's barely coming out of this range, though, but it's coming out, though. I'm coming out, coming. Gonna let it show. Breakout, right? 41.71. Bulls versus Bears. Well, monthly chart, let's drop it down to weekly. I mean, it's barely coming out of that. I mean, it's coming out. Well, the inverted head and shoulders. We would like to see it get up to like the 43.28 area. You never know, we might get a blast off if the Fed says, hey, we're done with this. You know, maybe they're, you know, this is pricing in a one and done daily chart. Broke the trend line, came back, retested it. Looks like pretty bullish. Especially if we have a stop just below the low. We've got open space. There's all kinds of old levels to hit. Right there. I can go back here. But right now we're sitting right here at these right here, right? So there's some levels to hit, but we got the little inverted head and shoulders there. And if you can't see it, I can draw it out for you because I can draw. Okay, what's going on here, right? So, oh, okay, that's what I was trying to color this in anyway. It won't do it. All right. NASDAQ 100 or the QQQs, whatever you want to call it. It's still the tech setback, the tech heavy NASDAQ. And then we got breakout there, moving out to a monthly chart. You can see that we are just clearing out barely bare, moving into the 100% expansion, 13,373, and then the 127% expansion at 13,841, 1.618, 14,437. And we could continue to move higher. I'm short-term bullish. I am, you know, longer-term bearish to a point. You know, I think we move sideways to down, and then we break higher. You know, in the fall, we will be back here, right? So if you're looking to buy the dip, this looks like a really nice dip. You know, we're in an uptrend. But I know a lot of you guys are momentum traders, and you know, this could get pretty pretty feisty around news time. Okay, so be careful out there. All right, that's it for me, guys. Bitcoin. Yeah, somebody wants to see some Bitcoin, BTC USD. I got some Bitcoin. Yeah, we needed to get above this all drawings, right? And you can see that we just came up that 30,000 area, pulled back, we're clawing our way back to it. You can see that we had this red candle sell off, and we have an uptrend. It takes a lot to derail an uptrend. One candle a trend doth not make, right? So just because we have one pullback, people, oh no, I lost a 30,000 candles. Like, it's one red candle, guy, and boom, we came back to a trend line, and I see I'm short-term bullish. Here, let's go to a daily chart. Got 2 points, old geometry 101, 2 points make a line. And then the third test of that line is so you have a trend channel probably that we can use. Boom. So we're just bouncing around this channel, upper top channel around the 36,000 area. Long as this trend line holds, if this trend line breaks and we see a retest of the 19,642, it seems like we're moving nicely up this ladder here. Interesting to see what the Fed says and how that impacts Bitcoin. I am short-term bullish, medium-term bullish. Maybe we'd like to see another test of the line. We're kind of like stuck in between. Clowns to the left of me, jokers to the right. Here I am stuck in the middle with you, right? Anyway, guys, thanks so much for watching. Thank you for your thumbs up, your likes, your shares, your comments. And thank you for being wonderful. Thank you for even watching me. There's lots of stuff you could be watching right now, and you chose to watch bulls versus bears. And so I'm quite honored and quite happy that you decided to stop by and watch this telecast. Okay. Have a great weekend. Happy trading. I wish you much success. We'll talk to you later. Cheers. Peace and pips. Bye. I'm crying. Oh my God. No.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!